Starting a business, here's a mistake that could cost you thousands. Picking the wrong business structure. Most entrepreneurs focus on their product or service, but the structure you choose today could make or break your financial future. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. You know what's interesting? Over 5 million people filed new business applications last year. 5 million. And most of them face the same question. Should I be a sole proprietor, an LLC, or a corporation? Here's the thing. This isn't just about paperwork and filing fees. The structure you choose affects your taxes, your personal liability, and how much of your hard-earned money stays in your pocket versus going to Uncle Sam. Story time. I worked with a business owner a few years back. He'd been running as a sole proprietor for 7 years. Simple, easy, no complicated filings. Then his business got sued. Suddenly his house, his savings, his kids' college fund, everything was on the line. Why? Because as a sole proprietor, there's no separation between you and your business. So what are your options? Sole proprietorship, it's the simplest route. You file your business income on your personal tax return. Easy to set up, easy to maintain, but here's the catch. If your business owes money or gets sued, they can come after everything you own personally, your car, your home, your retirement accounts, everything. Now, corporations are different. A C corporation is a separate legal entity. That means liability protection. But you might pay taxes twice, once at the corporate level and again when you take money out as dividends. An S corporation lets you skip that double taxation. The income passes through to your personal return, kind of like a sole proprietorship, but you still get that liability shield. The downside, there are restrictions. You can't have more than 100 shareholders, and they all need to be U.S. citizens. Then there's the LLC, that limited liability company. Think of it as the best of both worlds. You get the liability protection of a corporation, but the tax simplicity of a sole proprietorship. For most small business owners, this is the sweet spot. But what does this mean for you? Strategy beats rate always. The same principle applies here. The cheapest, easiest option isn't always the best option. You need to think strategically about your business structure the same way you should think strategically about your debt. Consider these three factors: safety, liquidity, and return. Is your personal wealth safe from business liabilities? Can you easily access your money, the money you earn? Are you maximizing your after-tax return? Here's another important point. This isn't a permanent decision. As your business grows and changes, you can adjust your structure. Maybe you start as a sole proprietor to keep things simple, then move to an LLC when you have more assets to protect. But here's my advice. Don't make this decision alone. Talk to a tax professional or an attorney or both who can look at your specific situation, because what works for your neighbor's consulting business might not work for your construction company. The key is understanding that your business structure is part of your overall wealth building strategy. It's not just about today. It's about protecting what you're building for tomorrow. And remember, I give you information on Ron Siegel Radio. I am not an attorney. I am not a CPA. I am not an enrolled agent, but I talk to lots of them. And generally, your CPA and your enrolled agent are not tax strategists. They report taxes. They report the proper way of what you have already set up with a tax strategist. If you need a tax strategist, let me know. I know them. Remember, whether you're managing business debt or personal debt, strategy matters. If you want to learn more about how to think strategically about all your aspects of your financial life, get your personal financial life in order at rsrlinks.com/keysteps. rsrlinks.com/keysteps for our financial house in order tool. This is Ron Siegel reminding you, strategy beats rate always. Until next time, we'll chat with you again. That's the Borrow Smart segment brought to you by GetHomeSelect.com. GetHomeSelect.com.